All right, everybody, it's me, Gregory Mannarino. It is Thursday, August 1st, 2019, and we really do have to talk. A lot of stuff going on. Pay attention to some of this, all of it. It's serious. I'm not kidding. Let's start off with the basics. As I am doing this video blog, stocks are higher across the board. Dow Jones Industrial Average, a triple-digit gain. All right, what else is going on? The U.S. 10-year yield has dropped below 2%. Like I explained to you, and this is going to continue for a while, no matter what is happening in the economy, and we need to cover that. With interest rates being suppressed like this, it opens a doorway for cash to move into the stock market. It also moves out of other assets. Right now, precious metals, or the derivatives of, are under pressure. Cryptos are under pressure. So it's a very easy mechanism to understand, and the middle class is being forced to subsidize the entire stock market through this mechanism. Let me show you something before I even move forward so you can get a visual on what I'm talking about here. So we understand that yesterday the Federal Reserve cut the federal funds rate 25 basis points. We need to talk about that too. But I want to show you the effect on the yield curve right off the bat. Look at the 1 month. The 1 month Treasury yield, 2.06. Do you see that? Now let's go to the 10-year. 10-year, 1.98. Could you imagine that? That a 1 month is yielding so much higher than a 10-year? The yield curve is absolutely remains inverted. A very bad economic sign. No matter what you hear out of the talking heads on CNBC, Fox Business, Bloomberg, look at the source. All right, that's what I really want people to start paying attention to. If you have the displeasure enough to follow or watch or laugh at one of these mainstream financial channels, again, they parade out CEOs, business owners who are trying to tell you that the consumer is strong. They need to tell you that because they have to program you. But what they will not tell you is our economy is in free fall. The narrative must be maintained. And let me cover that real quick. The IHS US Manufacturing Index just hit its lowest level since 2009. Yeah, you heard that, in a decade. In a freaking decade. It's incredible. And we just got the ISM manufacturing report, which they were expecting a gain. We had a loss as well. So, I mean, metric after metric is pointing towards this market, this economy in absolute free fall. And let's put a little light on something else. Tomorrow we're going to get some jobs numbers. What they're going to flash at you is the fake U3 number. It eliminates all the bad news, so you only get the good part of the report. It's insane. We are living in the time, people, that I swear to you that I don't think any of us could have ever imagined before, but that's where we are. And I guarantee you that the narrative of a booming economy will be maintained. Now, precious metals are getting hit right now. And again, why? We're getting a knee-jerk of cash, of course, into stocks, as we can see, and also into the dollar, because there's fear here. But there is also the prospect, and again, I was the first guy to say it. Sometimes you got to give credit where credit's due, and it's the truth. Goldman Sachs came out this morning, Goldman freaking Sachs, saying more rate cuts are coming. Well, hello, Goldman. I know all of you over there. I know some of you personally are actually watching my video probably right now. But if you're going to steal my stuff, why don't you just give me a little credit here? Because I'm the guy that said it first. Yeah, more rate cuts are coming, and that's why stocks are higher right now. On the hope, look, this market is being driven by hope that more drugs are going to be pushed into it by calls from the president, who's screaming from rooftops right now that the Fed did not do enough. He's very disappointed that there wasn't a deeper cut. As of yet, he has still not explained to you how it's going to help your interest earning accounts or help our economy at all. All he's concerned about is corporate America, pushing more cash into the stock market, making the 1% richer. Again, it's a setup here. It's a bubble of epic proportions in the stock market being built on the back of the debt bubble. I mean, we cannot get more bad economic news than we are at. And again, stocks are higher. Why? Because there's nowhere else for cash to go. Should it be going into precious metals? Sure it should. But when you have a market where the hard asset derives value from a derivative, they can do whatever they want to. It's fake. Everything is fake. And you got these players on the Confederacy of Dunces, you know who they are, CNBC and all the other, trying to make you believe that this is some type of utopia. Because they got to keep you programmed. They got to keep turning that knob harder and harder to make you believe that everything is great, so you will continue to spend. Meanwhile, consumer debt, household debt at record highs, it continues to get higher here. It's unbelievable. People are falling in line like the sheep that they are. Meanwhile, 1 in 4 people in the United States are borrowing from their credit cards just to make ends meet. You can't make it up. I don't know about you, but I find all of this extremely frustrating. I really do. I'm not lying. So I don't know what to tell you other than, again, fall back on the basics of what I've been explaining to you. If we know, and this is Goldman Sachs now, on my coattails saying that more rate cuts are coming the day after the Fed announces a rate cut. No. I said it before that. All right. As a matter of fact, for months ago. So, I mean, these people at these big lofty banks, they think who the hell they are. Well, let me tell you something. They are no smarter than you are. And they are definitely no smarter than I am. That's the truth. This is just out of control. All right, look, before I go way off on the deep end, I set up something really nice for you, and I want you to take advantage of it. Right on my website, traderschoice.net, there is a new free chat room. Completely free, no sign-ups, no nothing. Just go over there and utilize it. I'd like to get more like-minded people together. I've tried this before with that chat room. It just never really worked out. Who knows, maybe eventually I have to take this one down too. But go over there at least for now and enjoy yourselves. Try to meet people. Try to get in with people who, again, understand what's going on. Because the confusion here is off the Richter scale. But if you cut through it all and you hone in, and you really you avoid things like the Confederacy of Dunces, the Fox Business, and Bloomberg, you kind of have an idea of what's actually happening. But again, if you happen to watch one of these shows, look at the source. Where's it coming from? Do you believe that the CEO of some corporation is going to tell you that the economy is bad or things are not too good? Of course not. They have to tell you everything's great. So you keep on spending, you keep buying their product, you keep digging yourself into a deeper hole with regard to debt. That's all they care about. They don't care if you die. Whatever. They don't care if you end up in the street homeless. They want you to spend and borrow into oblivion. Again, it all goes back to the core of it, which is world central banks who are becoming the lenders and buyers of last resort. And this market is hinging on further rate cuts coming down the pike. That's why it's higher right now, because in a real market, if we would have got the bad rounds of economic news that we just got, the market would be down thousands of points. But no, not here. Now when you have an artificially propped up market by the Federal Reserve now suppressing rates, the president calling for deeper rate cuts, and mark my words, I don't care what's happening to the dollar right now. They're going to kill it. They're going to devalue the dollar. The president has been screaming about this for the longest time. And again, a weaker dollar helps the multinational corporations. It does not help you. And all this is about is the multinational corporations, the Wall Street banks. It has nothing to do with you. You don't mean a damn thing, and they don't care if you live, die, or end up in the street. It's the truth. Anyway, this stuff really does get to me. I'm not going to lie about it. As you can clearly see, look, I'm on your side. You all know that. And you're not going to hear this from anywhere else. People, get involved. Start your own blogs. Start writing about this stuff. Share these videos. Get them out there. Because I don't know what we can do. But we have to do something. We can't just sit here and do nothing. All right, with that said, I'm going to let you all go. Again, check out the new free chat room. I think you're going to like it. A lot of people in there already. More than likely, the room will completely fill up, and I myself won't even be able to get in there. That's what happened last time. But enjoy yourselves over there. At least, get together with like-minded people who understand what's going on. And again, capitalize on this fake market, rip its face off beyond recognition. Take advantage of my new quant system. Where is it? Right back here. Also on my website. It's 100% free. It's right there. You don't even have to download it. Learn how to use it, paper trade, and use the system against them. It's the truth. Make your profit, pull the profit, and invest in metals. In my opinion, again, metals are the most undervalued assets on the planet Earth, none more than physical silver. I know this is getting long-winded here, but the best advice I could ever give anyone, I think, has been the advice I've been giving since day one. I don't care what they do to the paper derivative of gold and silver. They can play with it all they want. At one time, all this is going to correct to fair value, and it's going to be epic. Absolutely epic. Physical silver is where you need to be. If I had to choose one investment, I'm telling you, that's what it would be. Hold physical silver in your hand. Let them play their games, because right now, obviously, the game is risk on. What's going to happen when this all flips? There's a 180 to risk off. Well, use your imagination. It's going to be epic. With that said, please share this video. Get it out there. Help ease my freaking absolutely off the Richter scale frustration. I love all of you guys. I really do. And I'll see you later.